Hi, this is Lara at Elliott Wave Stock Market with my second analysis of Apple for you for the trading week up to and including Friday the 15th of February. I'm going to very quickly recap my monthly wave count, which hasn't changed. I'm seeing this long rise and I've gone back to 1982 from that low right up to the all-time high for Apple. Looks most like a 5-wave impulse with some excellent Fibonacci ratios, and all the subdivisions are perfect. It fits perfectly in a trend channel drawn using Elliott's first technique from the high of cycle wave 1 to cycle wave 3 with a copy on the low of cycle wave 2. We have small overshoots of this channel on the way up, but no breaches until this monthly candlestick. So now we have a full breach of the trend channel, which is trend channel confirmation that the upwards trend is over and we're in a new downwards trend. So I'm labelling this new downwards trend super cycle wave 2. I have two wave counts looking at this downwards movement differently. Let's have a look at my first wave count on the weekly chart level. Here's the high of super cycle wave 1. And here's the downwards movement, and here's the really clear trend channel breach. Second waves are most commonly zigzags, so my main wave count will look at the possibility that supercycle wave 2 will subdivide as a 5-3-5 zigzag, which means that cycle wave A should subdivide as a 5-wave structure. It cannot be a leading diagonal, so it must be an impulse, with waves 1 and 2 complete and wave 3 still nearing completion. When the third wave is over, we'll have a fourth wave correction, which can't move back into wave 1 price territory. The main wave count at that stage is invalidated with movement above 505.75, and that price point is really important. It differentiates this main wave count with my alternate. When the fourth wave is over, we'll need a fifth wave down to complete a 5-wave structure for a cycle wave A. When that 5-wave structure is complete, we'll look for a trend channel breach, and at that stage we'll have confirmation that the downwards trend is over and we're in a new upwards trend, and I would expect a 3-wave structure upwards to follow a 5 down, which can't move beyond the start of the 5. Movement to a new all-time high is not expected for the main wave count. Movement above 705.07 would invalidate the main wave count. I'd actually expect, if we see a 5 down for cycle A, I'd expect cycle B to actually find resistance at the lower edge of this channel, which I drew on the monthly chart and explained there. When the 3 up for B is complete, we'd have another 5 down to a new low, most likely for a C wave, and that would complete a big super cycle zigzag, which is the most common structure for a second wave, so most likely. I do have a couple of concerns about this wave count though. I'm considering the degree of labelling here may be 1 degree too high. Alternately, we may be seeing an extended third wave unfold, which is pretty likely, and so that would see the degree of labelling within the first wave okay, but I'd have to move everything in here down 1 degree if it is extending further. We'll see how this one unfolds. Let's have a look at it on the daily chart, where the high for super cycle 1 is this point up here. So we have a 5 down here, complete for a first wave, a zigzag up here, complete for a second. This may be where a third wave has begun, which must subdivide into an impulse. We have 1, double combination for 2, impulse for 3, zigzag for 4. We need 5 down to complete, which doesn't have to make a new low beyond the end of 3, it's just most likely 2. At 365, intermediate wave 5 would reach equality in length with intermediate wave 3. And at this stage, intermediate wave 4 is most likely, highly likely to be over, but if it did continue further, maybe as a flat or a triangle, it can't move into wave 1 price territory. Both my wave counts are invalidated at the daily chart level with movement above 518.63. And here's the other reason why I'm not too happy with this main wave count. If this is indeed a third wave within an impulse, then we should have seen an increase in momentum as price moved lower, and according to MACD, we did not see that. The strongest momentum is at the end so far of this first wave. Now that may be remedied if this third wave is unfolding as an extended third wave, and so this may be correct as wave 1 and 2 within it, and if I move the degree of labelling here down, this may be only wave 1 and 2 within intermediate 3. If the next downwards piece of movement increases in momentum beyond the end of primary wave 1, then that's how I would label the downwards movement. So if momentum increases, that indicates that we've probably got lower lows than the target, we've got further down to go, and the trend is going to be more long-lasting. Let's have a look at the alternate. On the weekly chart, here's the high of supercycle 1. This alternate is looking at the possibility that supercycle wave 2 is unfolding as a big flat correction. I'm a bit happier with the degree of labelling within this downwards movement, and it looks at the possibility that cycle wave A within this supercycle flat itself may be unfolding as a flat correction, with a three-wave structure for primary A, a three-wave structure for primary B, and a 5 down for primary C still to come. If this downwards movement completes as a three-wave structure, and this is the price point that differentiates the two, the low labelled intermediate A here, if this is a three-wave structure, then subsequent upwards movement would move into this price territory here. At that stage, we would be very confident that price should keep continuing to where primary wave B is at least 90% the length of primary A, and is actually quite likely to make a new all-time high, because the most common type of flat is an expanded flat where B must be a 105% minimum of A. So a new all-time high would be fairly likely. And when that's done, a new low beyond wherever A ended would be also extremely likely to avoid a truncation and a rear running flat. Let's have a look at this structure on the daily chart, where the high for supercycle wave 1 and the start of supercycle 2 up here is this point up here. So the subdivisions are all labelled exactly the same way. We have a 5, 3 and an incomplete 5 down. We're still expecting more downwards movement. Both of my wave counts at the daily chart level expect more downwards movement for the next couple of weeks or so, maybe even a month. The target's a bit different though. For this alternate wave count at 409, wave 5 blue or minor degree would reach equality in length with wave 1, and at 395, intermediate wave C would reach equality in length with intermediate wave A. So the target here is a bit higher. The invalidation point in the short term is exactly the same. We're still seeing a 5-wave impulse down completing, and if wave 4 at blue or minor degree continues further sideways as a flat or maybe a triangle, then it can't move into minor wave 1 price territory. The wave count is invalidated with movement above 518.63. So when this 5 down is complete, subsequent movement above this price point would invalidate the main wave count and confirm this alternate. At that point, we would expect price to continue rising, where this upwards movement reaches at least 90% the length of this downwards movement and is fairly likely to make a new all-time high. I'll keep looking at alternates, but either way, no matter how I look at the structure for Apple, it needs more downwards movement, probably for at least another couple of weeks, if not maybe even a month. I have a couple of different targets, and after this piece of downwards movement is done, how high Apple goes after that for the next upwards trend will differentiate my two wave counts. That's all from me today with your Apple analysis, and I hope that everyone's having a fabulous day.